Tuloy ano ba? Wala niyo.
Wala ako, tutulog ako. Tulog. Christine mo. Kilala mo si Christine? Nasa work ko na siya ngayon eh. Friday yata yung lipat niya. Or Monday. Sorry. So you're from Agoy? Ang saying na... okay. Oo, ganito rin. Okay na yan. Marketing. Yeah. Maybe in our batch we have 14 people. Yeah. Yeah, well, this first few months, where we have one LP, which is LP1 term 1, who has two CPAs. They're both from the same audit firm. Forget that audit firm. Yung top 4 in audit firm. So you're familiar with Anna, you learn to move by the side. Okay. A Facebook page. Yeah, there's a club called ako, pwede activity sa mga salitan na pwede naman basta kung may time ka lang na iyan yung self na mga so you're the same school niya, no? Great. How about the others? From where are you? Where are you? Yung nasa, yeah, from the ICHR. Kung kaya kang tapusin yung isa na tuturuan din na yung ano. Ano na. Yeah, I'm planning to, the whole accounting course, I'm planning to go over it by part 1 and part 2. So hopefully, those people tomorrow can also join today because if not, they won't be able to know what we do after. Well, it's like, but normally, based on experience, are you an engineering guys? Or engineering guys? Normally, engineering guys, can easily cope up with accounting. Well, I have marketing, better, basic hard accounting. It really depends on the person. If you like software for it. Marketing. I like marketing because of the professor. Unfortunately, he had a stroke just last month. That's what? Yeah, profuse. So sad you won't see your professor in marketing. He's really good. But I heard the one who replaced him, it was last term, we have seven, is it seven or eight? Ah, eight na pala yan. Walang seven store, no? Ah, eight pala eight. So, yes, eight. Wow! LOG. LOG daw. May ganun yung doctor. Ano po ba? Study. Or dalawa. First week, score ang Elwin agad. Ito lang kami. Ay, roughly killing for term 1. Parang may data science report. How about yung lady in the back? From what industry are you? Yeah. Ah, okay. So you're a finance accounting. But yeah, what's your college degree? Marketing. I think they have basic accounting. Maybe later on I will let you sit beside those people who are in accounting. Perhaps no backend, so that you can help me guide them in the program. Meron naman tama, please naman sa accounting. Why? 30 hours? Ah, okay, ma'am. Mahal ko lang talaga ng access. Kung sa exam mo, perfect. Ay, nasa pikas kasi meron eh. Pero sa final, hindi ko na. Have you started yan, online first hack? Pikas ko lang ako. I recommend you go first week statistics and probability. Kasi there is an example if you finish it. Yeah. Pero may base naman eh. Yeah, there's a number something. And you have to score higher than 3.5 or 3.5. No, even 5. Pero kung gusto mo mataas, you have to. So I highly recommend you pack a lot of sleep because if you're already here, you'll be needing extra backup of sleep in a stuff. Ito ba, ilang oras tulog mo pa? 5 hours. Okay. Yeah. Worst what 2 or 3 hours. Especially if you want to join a competition with companies. Really well. Somewhere from Singapore. With freeze. Oh, no. BCI. So extra labor. So paano mo makasali? Some competitions are qualifying. Okay, there's a physical competition here in the state. So some students will be conducting for you. And then for the winners, they are the ones who will be selected. But for other competitions, you just sign up and then just see
open source. Pero yung mga lab, paano nakaka-join?
The laboratory, each laboratory will teach in the class.
Then you will
Then you will choose. And then for say for example, I'm in the finance lab. So the finance lab teaching the class, and then a lot of us apply for it. So there was a screening process. So you need to create an essay, and then an interview, and then your resume, and that's the process.
so pag nasa finance class ngayon, can be anything na
I know. You can only choose one. So the lab is your rotation for your MRR.
yun na.
Yeah, that's the lab. So for the thinking.
Can mo lang
Finance lab.
usually sa pag-pairing mo lang.
Yeah, for finance, it has Indonesian fund, Philippine fund, Singapore fund, India fund, and then the 18. The 18 does consulting services.
So these funds are actually
Yeah, it's live. For the Philippine and India fund, it's live. We're trading the argument, and then we are graded based on the performance of our portfolio.
so what is this naman? Like,
No, Indonesia and Singapore is not like so they have a mathematical portfolio in the Excel, and then they copy the performance compared to I'm not sure. It's the fund we trade in the market are all donated by other and through fundraising. And naubos na namin. Kasi nag-down sa very.
pero people of namin or realize
So realize when you sell the stocks, it's already but if you're holding the stocks, it's still then hoping for a better. Do you already have a messenger group within your client? Guys, you can create one so that you're already coherent once your started.
advance sila. Mga pagkwentuhan. Mga pagkwentuhan. Kasi ko sa'yo yung ano, essay ko. Di ba ako mag-friend? Uy, di ba ba na?
Okay, we start. May I ask first who are accountants here or who has a background in accounting? Like basic accounting, only the ladies. Marketing. How about other? Your
budgeting.
how about other? All engineers, all are engineers. Fun, fun, fun. just brief background. So these tutorials was initiated by our GSE staffs, edited Miss Anna and Miss Cora. So Miss Cora is your program director, right? Program associate. So she will be your mommy in your batch. So basically, if you need anything, just approach her. Okay, so before, there were no tutorials conducted this time. Then they found out that students had a hard time coping up with the subjects, especially finance, statistics. These are very heavy technical subjects. So this is the initiative of the GSU. So we should all thank them. Okay, so what we're gonna do today is we're gonna divide this whole course, basic accounting course, into two, and then we go over the next part for tomorrow. We save the next part tomorrow. Now, our objective here is not to make you accountants or what you call these experts on this subject. Rather, it's just so that it will give you a first hand or just an overview, so that when you encounter this in your pre-LOB and when your LOB proper, you won't be shocked with the lessons. Okay, so let's go over with the terms and concepts, and hopefully, if we can finish the first part early, I can share you some lessons which can be found in the course pack. So let's start with the terms and concepts. This one. So this accounting is why do you need to study accounting? First and foremost, since your course is Masters in Business Administration, and in business, accounting is its language. So your first subject that is related to accounting is the LOB, or the language of business. So you communicate through accounting. So the very first type of accounting, we have a lot of types of accounting. We have cost accounting, monetary accounting, but the basic one is the financial accounting, wherein it's the accounting process that creates the financial statements. So from the transaction, from the entry of transaction to the generation of the basic financial statements. So this is what we call the financial accounting. Now, for the company transactions, we have three basic types. We have operating, investing, and financing. So for the operating transactions, these are your normal sales, collection of credit, purchasing of your supplies, and incurring expenses. For investing, this is where you purchase property, plant and equipment, machineries. And for financing, this is where you source your fund, whether it from your own personal money or from external borrowings. Now, the recording system, we have 8 cycles in the accounting process. It starts with the journalization of entries, or the journal. Second is the ledger. Third is the closing entries, the accounts, and then the trial balance. Closing, adjusting entries, and then go over with the basic financial statements. So for the financial statements, just tell me if I'm moving too fast, but this is just an overview. Anyway, we will just go over it one by one in the next slides. So for the basic financial statements, we have the balance sheet, income statement, statement of cash flows. And these are the users of the financial statement. So basically, this is how you measure a business, how it performs, and how its current financial position is. It's all represented in the financial statements. So say for example, if you're an engineer and then you created a building, right? So you can see or monitor the building's construction if you have something like progress report or something monthly progress report, and then what's the status of the building and what are the materials that are required. So in the business, in accounting, the financial statements will serve as your metrics or your guide where you can really what's its current status. Okay, so the financial statements is being prepared by the company itself. Now, we have the external auditors who will testify. So they are the independent body who will testify the accuracy and the faithfulness of the presentation of
financial statements. So they are going to counter check if that is presented fairly, like it has no correction, it has no malice or matter. So normally there's a lot of magic in that. So okay, normally in NPA you're always thought of always begin with an end in mind. So before you start any task, you should be able to picture out what's the outcome of this task or what's the end state or end product. So in financial accounting, the end product is always the financial statements. So let's go over it first, and then before we start from the beginning. So the first very basic financial statement is the balance sheet, or it's called statement of financial position. So it's the in the new standard, it's called statement of financial position. So in the balance sheet, this is the snapshot, a snapshot of the current status of the company. So it shows you its assets, liabilities, and equity. So this is the parts of the balance sheet. Normally you have the company name above, and then the balance sheet as of. It should always be as of, like it's a certain point in time, and then the date, September 30, 2014. Now it has three basic elements: the assets, liabilities, and owner's equity. And it is further divided into, like, for assets, it has current assets and non-current assets. So what does this mean? So current assets are assets which can be realized within the accounting cycle, or usually within 12 months. So if the items in the assets are not realized in 12 months in the normal operating cycle, it's classified as non-current assets. So usually these are the buildings, transportation equipments, usually property, plant, and equipment. And that's the same with the liabilities. If your liability is within the 12-month cycle period, it's called current liabilities. And if it's more than 12 months or more than the business operating cycle, it is classified as non-current liabilities. And then you have the owner's equity, wherein this is your investment in the company or your retained earnings, which is your accumulated profits or losses. So any question first in the balance sheet?
About
Yeah.
the expenses, why are they considered assets prepaid expenses?
Okay. Prepaid expenses is an expense. So if you're correct, it's an expense but not yet incurred. So say for example, you're renting a apartment. You're renting an apartment, and then you paid for 3 months in advance. So you haven't consumed yet the rent, right, for 3 months. So it's classified first as an asset. And then once you consume the 3 months period, that's where you classify it as an expense. So later, I think we're going to go about in part two, in the accrual basis. We'll discuss further what is the prepaid and accruals. So but that's a nice question. Okay? So this is a snapshot of a certain point in time. Now, the income statement or the statement of operations. So this is where your income and expenses go. So earlier, it's assets, liabilities, and equity. Now it's revenues and expenses. So this is how the company performed in a specific period of time. So earlier, it's the company's position at a certain point in time. In income statement, it is how your company performed in a specific period of time. So income statement, this is for the month ending. So earlier it's as of, but now it's for the month ending, September 30th. So it is composed of sales, less your cost of goods sold, and then all your expenses to arrive at your net income. So there are complicated income statements and balance sheets out there, especially in your case exhibits, but this is just the basic one. So you should familiarize yourself on this one because normally in our cases, in Harvard cases, there are a lot of financial statements that you go over. You're gonna read it to assess the additional information to correct the things that you need to correct. And then the next statement is the statement of cash flows. So this is where you will find your cash inflows and outflows. classified according to the type of activities, like operating activity, investing activity, and financing activity. So normally, owners or managers usually they look at this cash flow because this is more important than the net income. So you can recognize an income without having a cash. So what's important is the cash being generated by the company. So that's just an overview, and that's the final product of the financial accounting. So by the way, in term one, you will have your LOB, right, your language of business. This is a basic accounting. But prior to that, you will have your pre-LOB. So it's like this tutorial, that this is for all those people who are non-accountants. So this will guide you to give you a basic knowledge and skills to read the financial statement. Alright, so let's go over to the important concepts in accounting. So first concept in accounting, so these are I think the principles or the policies. I don't know if I can think of an analogy for an engineering or but basically these are the concepts that is used or used as a guide. So first is the entity concept. So the entity concepts is like separating your personality from that of your business. So say for example you have a business, and then the entity concept assumes that that is separate from you. Because normally, if you're a business owner and you don't know anything about accounting, whatever your expenses is an expense of your business. And whatever your business income is unique your income. So that's why people are growing from the money of their business. But if you're an accountant, you should know that the business is separate from that. So you should, once you invested your funds in the business, it's not your own money anymore. And this is also important when it comes to recording of transactions. So it eliminates your transaction from that of the transaction of your company. So you're only gonna record all the transactions of your company. So you're not gonna record your personal transaction. Next is the money measurement concept. Any question about entity concept? Next is the money measurement concept. So this is just saying that in accounting, all transactions should be or can be measured through cash or monetary value. If you cannot measure it through monetary value, then you cannot record it as a transaction. Going concern concept means that a business is foreseen to operate in a foreseeable future. Like it will not cease to exist after 1 or 2 years. So this has a lot of implication later on. We will discuss the accrual system and the cash basis system. So these are all tied up to the going concern. Next is the consistency concept. So this means that once you use a policy, it should be consistently used all throughout your reporting periods for the purpose of comparability. So say for example, you prepare your financial statements today using these policies, these policies and guidelines. If you prepare your financial statement in the next period, you should also use the same policies so that you can compare. If you have a change in policy or your board of directors used a different policy, you should disclose it in the financial statements that you had a change in accounting policy and that you should reclassify or restate all previous financial statements using the new standard or the new policy so that you can stay compared. So materiality concept states that not all transactions should be recorded, only those materialized. Like, or this will guide you in the classification of your transaction, whether it's an asset or it's an expense. So say for example, 0.01. So it's very immaterial if your balance sheet is stated in millions or billions of pesos. So this will just guide you in the classification of expense or asset. But take note that if the nature of the transaction is through fraud, fraudulent concerns, there's no material concept applies there. It is always material if it's due to fraud, even if it's 1 peso. That is very material. Okay. So those are the five basic concepts. Like it's the 10 commandments in accounting. So any question regarding none? If none, let's proceed to the quality and attributes. Okay, relevance and reliability. So the financial statements is prepared with relevance and reliability. Relevance means that the information you generate from the financial statement should be timely and useful. So if it's not timely and it's not useful, then therefore it's not relevant. Then you should not generate or use your resources to generate that anymore. While reliability means that all the information in your financial statement can be traced with source documents like receipts, ORs, vouchers, and it should be accurate. So normally there is a trade-off between relevance and reliability. Because preparing a financial statement takes time, like especially the information comes in a piecemeal, in a piece by piece or portion. So sometimes there are decisions needed to be made, and then you don't have a um, concrete data to support or to use for your decision. So that's normally the trade-off between relevance and reliability. So if you want a reliable data, it takes time. But when that data comes, it might not be relevant anymore. So if you will choose whether relevance or reliability, accountants usually prefer the reliability. So say for example, if it's relevant, you really need the data and you don't have it there. Sometimes accountants use estimates, right? Estimates. And we all know that estimates is not that reliable. It cannot be traced back or something because it's just based on scientific things or educated. Okay, next. Accrual versus cash basis. So this connects to your question earlier. So accrual basis means that you record your income and expenses regardless of cash received or paid. So meaning, say for example, I rendered you a service, but you didn't pay me yet. So accrual basis means that I should already record my service income, but I should also record accounts receivable from me. But using cash basis, you only record income or expenses once you are being paid or you use money. So that's the difference between accrual and cash basis. So when is this applicable? So business usually uses the accrual basis based on the standards, while the BIR or your revenue uses a cash basis account. So this is where companies usually pay two books of accounts for their tax purposes and then for accounting purposes. So cash basis. And then GAAP and IFRS are the standards governing the accounting practice. So it is in the Accountancy Act of 2008 or Accountancy Act of 2008 or 2004, not sure. But these are just standards. So I guess those are the terms and concepts, basic terms and concepts. Now let's go over with. You have a copy of the presentation that was sent with Ms. Correa. Okay, so this is not part of the course pack. If you have any questions there, I can answer it tomorrow if you go over it tonight for the course pack. So this is an added value. So we're gonna discuss the elements of financial statements and the accounting cycle. Way too fast for that. So we might be able to finish the whole course pack today if you guys are okay with our case. just tell me if you have questions. Don't hesitate to ask. And we normally call by first name basis. So I'm Andrew. If you have questions, just enter. Okay, for the elements of financial statement, so just like in chemistry, we have elements like nitrogen, okay, don't know the rest. Maybe, what's your name again? Raymond Reynolds. So in accounting, we also have elements, and these are assets, liabilities, equity, income, and expense. So you know these assets, liabilities, and equity are blue colored, while the other two are red colored. So there's these first three are the balance sheet elements, the balance sheet items. So these can be found in your balance sheet, and these other two are the income statement items. Okay. For the balance sheet items or assets, liabilities and equity, these are the examples of assets. So we have cash, land, accounts receivable, marketable securities, inventories. These are just examples, but basically, I also sent you a glossary of account titles, which you can familiarize yourself with. This one. So it lists all the account titles normally used in business in its description. Okay. For an item to be classified as asset, there is a requirement. So there are four requirements. Have you go over it with the course back? The number one requirement is it should be as a result of a previous transaction. So before you can recognize an item to be an asset, it should be a result of a previous transaction. Second is it can be measured. It can be reliably measured. So you cannot measure, if you cannot measure, then you cannot classify it as an asset. The next one would be future economic benefits is expected to flow from that asset. Or you can expect to generate economic benefit out of it. And then the last one would be you should have the control of that particular asset. So say for example, a common asset of a business is cash. So cash is a result of a previous transaction. So if you sell a goods or service, then that's a transaction, and its result is cash. Also, you can control the cash. You can control when to dispose of it or when or how to use it. Another one is cash can be measured at face value. And then the other one is economic benefit and expected out from cash. Where you can use cash to purchase another goods and service and then sell it. Yes.
Compared to the asset, how about buildings that have multiple owners? How does that affect the balance?
Okay, that's a very good question. So buildings is also classified as an asset, normally a non-current asset or a long-term asset. If it has many owners, then the one who has control, ultimate control of the building, it will be the one to record that the in the balance sheet.
51%.
Not really 50%, but normally whoever really owns the building. Say for example, if you have building there's in Ayala, right? We all know that a lot of business occupy the building, but they're just renting it. So you cannot see a building in your financial statement. Rather, you can see periodic recognition of rental expense. But the ultimate owner of that building has a the building with the financial statement. They are the ones who record it. So you will not divide the building into half.
And the multiple groups moving one building.
No, yeah, no. You cannot. But for condominiums, you can, because condominiums have separate title for each unit. But if it's a building as a whole, then definitely you cannot do it. But if you can, and then you can measure it at cost, and you have control of it, basically if it meets all the criteria, then those two companies should split the building. It's just the recording part. It's classified as an.
Like, okay lang sa agreement.
Yes, it depends on
Sa expectation of future value,
yeah.
uh, just as long as you have expectation on that asset, it can be deemed an asset. If We know a lot of people expect it to go down, but you
Yes.
expect it to go up.
Yes. So say for example, stocks.
Yeah.
So stocks nowadays normally goes down because of the market condition, right? So people might expect that this is not an asset anymore. But for you, if it's your investment and you think you can derive future economic benefit out of it, so then you can classify it as an asset. Now, say for example, employees, can you consider an employee an asset? Are your employees an asset? Okay, let me know why. Why?
Because you can measure it. But you can,
Yeah.
from the concept of monetary.
Correct. So you cannot measure the value of your employee. But what if I'll measure my employee, I just assign a number. Like say for example, this employee costs 1 million. I'll assign a value in your financial statement. Can you recognize that as an asset? The answer is still no. Because you don't have control over your employee. So although your employee definitely will have economic benefit in the future, you cannot tell when your employee leave in the company. So you don't have a definite control out of your employee. So it's not. And there are also employees which are liabilities. So they can
So, so for employees who are under a contract or a bond, yeah, would you consider them an asset?
That's also a very good question. So since you have a specific point in period of time where you can lock them, right?
Yeah.
But actually, there's no such thing as locking period. Because anytime, if the employee wants to leave, they can really leave. If you force them to serve their bond or anything, that's tantamount to what you call this in law, but forced labor. But there's a legal term. So they can pay the bond, but you can really not do. Okay. Yes.
There's the law that the retirement benefit. Yes. The retirement benefit. Or the reflected.
Okay. For the retirement benefits, it's a liability of the company. So let's go with the liabilities and maybe we can expound further. So liabilities are, it's the opposite of an asset. If an asset you expect future economic benefit out of it, liability is the opposite. You expect that future economic benefit will flow out of the entity or out of the business. So examples of these are income tax payable, loans payable, notes payable. So basically in your exam, if you see a payable, that's a giveaway. Like yeah, it's just a liability. Maybe the exception for this one is the accrued expenses. So accrued expenses is the opposite of prepaid expenses, wherein you already recognize, you already incurred the service, or you already say for example, you give me an example. For the rent, let's use the rent example earlier. If you were the owner, and then John, let's say, John paid me 3 months in advance, but John haven't used the 3 months period yet for the rent. And therefore, I will classify the money I received as accrued expenses, or it's a liability. So I have the liability to let John use my apartment for 3 months period. If not, I will give back the money that he paid. So salaries payable, bonds payable, etc. Those are all liabilities. And then the next one is equity. So equity is basically the residual amount after you deduct all your liabilities from your assets. So we have an accounting formula. It's assets equals liabilities plus equity. So the golden rule is just to make that equation always balanced. So equity, examples of equity accounts are additional paid in capital, retained earnings. Retained earnings are your cumulative profits and losses over the years. Then preferred shares if you're a corporation, common shares. If you're a sole proprietorship or partnership, you use owner's capital. Like say, for example, Gomez Capital or Bolando Capital. And then we have a revelation reserves. Any questions so far?
We think
No, retained earnings are not always cash, but rather they are just presented in the financial statement as um, an amount. It could be your retained earnings can be a building or an asset, as long as it's an asset. Because your liability plus equity is equal to your asset. So it doesn't always necessarily equate to cash.
Could you expound on the evaluation?
Okay, so revaluation reserves are normally recorded when you appraise an asset. So say for example, you have a land now worth 100, and then after how many years it became a million or so, then the maybe the increased part is kept in the revaluation reserve. I'm not so sure. There's some more technical explanation for it, but I think that's a somehow. How is it correct, bro? By the way, Archie is our classmate. He's an MBA, and he's also a certified public accountant. So
As long as the land is still in your possession, meaning you haven't sold it, you haven't
okay.
put it in it. But as the facility is there, third party or the buyer.
Okay. So, any violent reaction? Maybe you guys in the back are CPAs also. We can hear from you. No. So let's proceed to the elements in the income statement. So the first one is the income. So these are all your sales, miscellaneous income, interest income, revenues, dividend income, gain on sale, investment income. These are all examples. You can refer the definitions of this one in the glossary that I sent. And for the expenses, these are all the expenses that we basically utilities like power, water, salaries, supplies, rent, miscellaneous, and cost of goods sold. So why did we discuss this? What's its importance? So basically, the very basic in accounting is to know how to record a transaction. But before you're able to record a transaction, you should know the normal balances of the financial statement. So this came from the previous cohort 12. So they taught us this allegre. Then I'll pass it to you guys, and hopefully you can pass it to the next cohort. So allegre means assets, liabilities, equity, and then re- revenues and expenses. Then we ask them what's the G. So the G in the middle represents God. So you will always put God in the center. So that's what they told us. Okay, so take note of this slide. I'll picture the debit and credit of accounting. Because I don't know if this was substantially discussed in the course act, but you'll use this one. You have an exam. We have an exam, a basic recording of transaction. It's one exam. For assets and equity, its normal balance is debit. So I'll tell you later what's debit or credit. But for now, just memorize. The extremes part are debit. So for Allegro, extremes debit. While those all items in the middle are credit. Okay. Are you familiar with debit and credit? So it was invented by, I think, Fraluca Pacioli, the double entry system, and the double entry accounting system. So once, for every transaction, I think for one transaction, there's always a two partner entities for every transaction. All right, next. So let's go over first with assets and expenses. So if you want to increase your asset, you're gonna since by the way, the normal balance of an element is where the account increases. So if you want to increase an asset, you debit it. So that's the purpose of the normal balance earlier. The normal balance is where you increase, or it's where the side where you increase that account. So the normal balance for your assets and expenses is debit. If you want to decrease your assets and expenses, you credit. So assets expenses increase, debit, decrease, credit. Okay? So say for example, I have a car. I have a car. I want to increase its value. I want to record this in my transaction. Should I debit it or should I credit it? Debit. What if I sold this car? Should I debit it or credit it? Credit. For liabilities, equity, and income, these are all the elements in the middle, right? Of the ledger. If you want to increase it, you should credit it. It's the opposite. If you want to decrease it, you should debit it. So normally debit is on the left side and then credit is on the right side. Yes.
Never asked a question. Bakit yung ATM natin o debit card while not credit card?
Okay, that's a good question. So credit card is called credit card because you as a holder, it's your liability. Yes. And once you incur a credit, you increase it. So if you incur your liability, you increase it. Right? Now assets, you already debit. So that's an asset. So it's in your perspective, not in the bank's perspective. Normally, this is where the confusion goes because bank has a reverse assets and liability when it comes to us. So say for example, we deposit cash in bank. For us, the cash in bank is our asset. But for the bank, our cash is their liability. Okay, so we have a bank reconciliation on that part that we use to make sure that our recording of cash is the same with the recording of bank. Did I answer that?
Yeah.
Okay. So let's proceed. This is a summary of everything, the debit and the credit. So we have assets. If you want to increase it, debit. If you want to decrease it, credit. And the rest are actual. I actually use this on our back, so that's going to haven't any questions so far? I think this is the basic, the very fundamentals of accounting. So you should memorize it. Maybe at least this one, at least this part. Now let's go to the accounting cycle. So earlier I told you that there is an 8 process in the accounting cycle. So this is the journalization of entries, the recording to the ledger accounts, an adjusted trial balance, adjusting entries, all the way to the post-closing trial balance. So the generation of the financial statements is in this part. For now, we'll focus on these first two. The first one, that I'm doing next. So for the journal entries, so the journal entries, this is a standard format for a journal. Have you seen this one ever in not but the actor? Yeah. No, okay, that's not really. You saw it, already saw it. So this is how you record a transaction. So this is where the date, particulars, debit, and credit. So we have a called books of accounts. You have the general journal, the cash receipts, and then the cash disbursements. So this is an example of a general journal. So you record the date when did you incur the transaction, and then this is your account like asset, equity, liability, income, or expense. And then this is your the debit side and then the credit side. So normally the credit is indented from your debit. So if this is your debit, it is indented in credit. And then normally this is also indented. But in this illustration, sometimes author just level this one and then just indent this one. Then you have the transaction description, or that it describes what is this kind of transaction. Okay, transaction description, or that it describes what is this kind of transaction. Okay, let's have an example. Patrick started a business and invested 500,000 as capital. So that's a transaction. So 500,000 in this one is cash. So therefore, you will okay. Cash is an example of what element? If you can remember, it's an asset. Right? Now, if you want to increase that asset, you what do? You debit it. So you put it on the debit side. Okay, I'll show you the accounting equation. So our accounting equation is assets equals liability plus equity. So now we recorded, we increased the cash, it's an asset. So we have 500,000. So we need something to balance the equation. That is why we need another entry in our journal. Okay? So any guess what would be the entry? Equity. Okay, very good. So it's called an example of the equity account is Patrick capital or capital comma Patrick. So it's an example of equity account. So for sole proprietorship, they use that. If you're a corporation, they use share capital or common shares or preferred shares. Then equity. If you want to increase equity, you credit. So that's why it should be on the credit side. So that makes our equation balance. There. So at any point in time, this should always be balanced. Right? And okay, so the record initial investment, that's the description. So before preparing a financial statement is very a tedious process. From the journal entry, use worksheets to the generation of financial statements. But today, it's just a click of a computer. So the financial statements can be generated. Another illustration. Who would like to volunteer to answer this one? Raise your hand. So in MBA, you will not be called if you do not raise your hand. So there's no forced participation. And you should start to practice. You should be comfortable reciting. Okay, you're really great. What's your name first? Kat. Okay. Okay. Very good. That's correct. So since you bought an equipment is an example of an asset. It's a long-term asset. So if you want to increase the equipment, you record it, you debit it. Now, this is a very good example where you decrease your asset. So you use cash to pay for an equipment. So if you want to decrease an asset that's already recorded in your books, you credit. So the effect is like this. So since it's all assets, 300, and then you decrease your cash by 300. So it's still balance after the second. Okay, still balance, right? So that's just the usual how you record your entries and then what's the impact in your financial statements. So this is actually a horizontal, it's like a financial statement. You can view a financial statement. So you have cash. So if you record this transaction as January 1, and then this is January 31. So this is your snapshot as of January 31. So this is the financial position or the balance sheet of your company. So you have cash, then you have equipment, and then your owner's equity. And as transaction goes, you will record liabilities and more of equity, more of assets, or it's assets, or it's asset liabilities. As long as it's balanced. So you will know that you're not balanced anymore. This will not balance in the trial balance. You can figure it out. Another example, who wants to volunteer? Alright, a guy in the back.
You get this inventory by taking out your main credit cash
Correct. I realized you have it up in your account. But I think you have it open there. So you debit supplies inventory, debit cash. and credit cash. So I just realized that we sent that. The record purchase also applies. Okay, so basically that is the first process or step in the accounting cycle, the journalization of entities. So the difficult part here is to realize what account title should be used. So say for example, you're faced with a transaction, say selling pens. What account title should I use with this one? I think that's the most difficult part. And then the recognition of it's a debit or credit part is just easy. I mean, if you know the basics. So non-accountants during our batch, we had a hard time in this process because I don't know if we were actually the debit and credit is not taught in class. You should learn it by yourself or outside the class. Because normally all concepts are for self-read, and then when you go to class, it's more of the case. You apply what you've learned, the concepts in the case. So that's how we discuss it. AAM. So this is the second step, the general journal or the P accounts. So it's called P accounts because it's a form of letter P. So the account title, this is where you put cash, equipment, or etc. Then the debit side and then the credit side. So this is where you summarize all transactions involving a particular account. So say for example, if it's cash, all cash transactions are recorded here. And this is called a ledger, right? Ledger, cash ledger, accounts receivable ledger, etc. So can you imagine for each account there should be one ledger. So you will have a lot of ledgers. I'll show you an example. I have prepared a template here for our class. Yeah. So our learning team used to use this template. So once we had our journal entries, we summarize it in the letter. So all cash transactions are being placed here, and then it's partner. So basically, you will arrive at a offset amount. So these are all the ledgers used to prepare. Yes.
Like a list of all the accounts.
Yeah, the glossary, the one that I said, those are the list of the accounts.
It's nothing beyond that.
Actually, there are a lot, but that's the most basic. And sometimes different companies use different or code the titles differently. Say for example, one company might use inventory only, and then the other company might use supplies inventory, or they call the account titles are different. So this is just account titles used in the book that you're using in that class. Okay, so how to record transactions here? So say for example the one we recorded earlier, we debited it, right? So therefore we should place it on the debit side of the T account. Now we purchased an equipment and we credited cash. So we put it on the credit side. We purchased additional supplies and we credited that. So it should also be in the credit side. After recording all the transactions in cash, you will place a bar and then tally everything. This process is called footing. Footing. Normally, you put this side first, so there's 500 here first, and then you put this one, there's 350 here, before you arrive at the final balance of 150. So where should you place this amount? This is important. You should place this amount to where the side that is bigger. If cash is bigger on this side, you should place the 150 on this side. So does this occur that your cash is on the negative balance? The answer is yes. So it's called overdraft or bank overdraft. So sometimes banks allow you to draw checks on them even if you have no balance in them. So that can be classified also as a liability. What some companies reflect is as a negative cash balance. Alright. And then you need to do this step for all transactions, not just for cash, but you should also record it for equipment, and then you also have another one for supplies inventory, and etc. etc. So after recording all those transactions, you will place it in the trial balance here. This is called the trial balance. Yeah, adjusted one. Okay, let me show you a live working time. So here in AM, you will meet a lot of people, right? It can be your learning team, classmates. So this is a company of my classmates. So he asked me to do his financial statement. So he has a business. We don't have a financial system. So we created an accounting system for him. So it's just Excel based. We can't afford to buy a software for him, but it's a good start. So these are all the journal entries that we've made. So for example, like here, we have cash on hand, share capital. So this is the record date. Actually, this is not, the format is quite different from what I showed you earlier. But it really depends on the format and the template of the journal entries. So these are just examples. Here, we recorded all transactions. You will see it. After that, normally you put this in a ledger, right? Where you summarize individually. And then after summarizing it individually, you will go to the trial balance. So this is the third step. After the ledgers, the trial balance. So this is where you place all the account titles and then its balance, whether it's on the debit side or it's on the credit side. Yeah. And then you should see in the bottom the summation. So the debit and the credit should balance. So if it's not balanced, meaning there's a wrong in your preparation process, whether it be in the ledger or the journal. So it should be balanced, debit and the credit. Now, if you're familiar with all these accounts here, I actually put the class code already here. It's classified as current assets for CA, non-current assets for NCA, current liabilities, etc. I use this for the next step. This is the preparation of the financial statement. So all the balance sheet elements here should be forwarded to your balance sheet. Okay, so it's forwarded here. So this is a work in progress. So there's no one at the back. And then liabilities and equity. So this is an example of a balance sheet. Here. So cash on hand, all the assets, total current assets, and then all the current assets. Again, when should you classify an item as a non-current asset? If it can be realized or used in more than one cycle or the normal cycle, or more than 12 months. 12 months. So business usually use a 12-month period, and it ends in December 31. Well, December 31. It's called a calendar period. I think. And if it doesn't end in December 31, it's called fiscal period. So normally it ends March 31. So it really depends on the type of company, because they pattern it to the seasonality of their business. So most companies or businesses has a peak on December. They want to capture that before they're going to close their financial statements. So it's It's where their sales is high, their cash is high. So that's a good point in time where you close your balance sheet. Then you can show the banks, here is my current financial position. You don't want to show the bank because you're going to borrow in a bank. You don't want to show the balance sheet in your low times. Like you have no zero cash because you haven't collected it from your customers. So that's why most of the companies have in December ending. After the balance sheet, you carry all your income statement elements, the revenues and expenses on your income statement. So here's an example of your income statement. Revenues, then these are all complicated accounts, but let's just stick with the simple accounts first, the sales and then the expenses. So in your pre-LOB, you will be asked to construct a financial statement. You will be given you want to borrow, want an exercise, I'll give you one. You will be given a set of accounts, listed accounts. Then it will be classified as debit or credit. And then you will have to form or to create a balance sheet out of it or an income statement out of it. So the test there is you should be able to classify each title, whether it is an asset or it is a liability, equity, income, expense. Yeah. So that's an example. I try to prepare one for you tomorrow. Maybe you will show tomorrow. Next. Sure you will show. Then the last one is the statement of cash flows. It is where you can see all the cash movements. Because in the income statement, you are not guaranteed that the revenues you reflected there are cash transaction. You are not reflected that the expenses you recorded there are cash transaction. Because say for example, you sold a car because you're in a car retail business. You sold a car to your friend on account on a payable basis. So you recognize an income, sales, but you don't have cash. So that is why you can see you have a statement of cash flow to check whether your business is really earning cash or not. So this is where you can see cash flow from operations, cash flow from investing activities, and cash flow from financing. So in your pre-LOB also, you will be asked, this is on the later part, and this is where most of our classmates had a hard time preparing for the statement of cash flow. So it's a difficult topic. It's not easy, but I know you will survive this. The creation of cash flow. Because it has two methods, the direct method and the indirect method. This is what I think, this is the indirect method. And then you have the financial ratios. So say for example, you have a balance sheet and income statement. How will you know that your business is doing well or not? So we have certain metrics that we are using to check if it's good, if your company is okay or not okay. But basically, let's go here first. For the balance sheet, this is the normal question MBAs need to have. So you don't need to be an expert in accounting or you don't need to be well versed in this one. If you're and if you have an MBA or a company owner, all you need to know is the basics so that you know that if your accountant is playing with you or not. Because if it's your business and your accountant is like in control of your assets, just like I have to mention. So just to know if you're being fooled or not, right? So you just need to know the basics. And this is why, just to share an experience, most of our classmates, there are two types in our finance. One is those who excel in finance, and the other one who plays the victim of finance. So they like, oh, I don't like finance. How can I pass this or something? Rather, instead of playing a victim of finance, just use your strength, use it as a leverage. Excel in marketing or in other subjects. Why do you want to exert all your efforts in this finance? It's not just MBA is not just all about finance. But if you want to become a CFO in the future, then definitely having a good grade in finance is a good way to go. Just don't play a victim of finance. Later on, for sure, you will encounter those guys. Like, I'm dying. Okay, so for financial ratios, these are just the example metrics that we use. For profitability, gross margin ratio, operating rate ratio, net margin, net profit ratio. So these are all the ratios that we use if your business is profitable or not. So it's, okay, we just dig deeper maybe on the second part. I'll just show you other. These are the efficiency ratios or how well you use your working capital. This is your liquidity ratio. So liquidity means how well can your business transform or make money or liquidate cash. And then solvency ratios is how well you can pay current liabilities in the long term. So these are just examples. And, let's go back. Understanding here. Yes. Yes.
So, what's the come to the point that you say that that's an expense? Do you credit credit rebate then? Yeah. What do you debit?
Okay, that's a very good question. Okay, so normally if you pay your rent in advance, so it's an asset, it's an advance. You haven't incurred it, right? You're gonna debit prepaid rent. So you want to increase an asset, you debit. Say for example, 100,000. Then what's your partner? It's cash. So you pay cash. If you want to decrease an asset, you credit. So makes sense now the debit and the credit. 100,000. Now after 3 months, this asset will be eventually be consumed. So this asset will become an expense. What's the normal balance of the expense? The normal balance in the Allegro expense is debit or credit? Who says it's credit? Who says it's debit?
Debit.
Yeah, it's debit. Because it's in the extreme, right? Allegro expense, debit. So if you want to increase an expense, you should debit it. So therefore, you will record rent expense worth 100,000. So therefore, you increase your expense. What is its partner? You want to decrease your asset because it's already gone. So therefore, you should credit your asset. 100,000. So this is the partner. 100,000. So this is the partner. So the question is, your question is, first it was recorded as an asset, and then eventually it will be reclassified as an expense, and then you eliminate the asset. So if you have a ledger, the P account of your prepaid rent, if you have a debit here of 100,000, you have a debit, right? And then you will have a credit of 100,000. Therefore, at the end of the period, you will have zero balance on your prepaid rent. So you have nothing to show in your balance sheet as prepaid rent. So zero. But you can see in your income statement, rent was 100,000. Any question? And by the way, this process here that we're asking is called adjusting journal entries. So it is normally made every end of the month, during month end. That is why every month end accountants are busy. They have a lot to prepare. The financial statements are just in journal. You will have an exam of those also. Yes.
For the second part, the rent expense.
Okay.
What is the first month? I every month after I've had prepaid rent, I have to go back to rent expense every month.
Correct. So that you can have a matching. Like you match your expenses to the period where you incurred. So that's a very good question. So what if the scenario is this prepaid rent is good for 3 months, and then every month you record it, right? Therefore, for the first month, you will only record one third of the 100,000. So say for example, that's 3 or something. Like that. So after the end of the first month, you will recognize an expense worth 33,000, and then you should decrease your prepaid rent by also one third. So therefore, if this is your prepaid rent, your credit is only 33. So at the end of the month, in your balance sheet, you will still have 77,000 of prepaid rent. And your income statement, it will show 33,000 of rent expense. No, 33,000. Yes, 67. I'm not really fine. But that's a good question. See, I told you this would be easy for you. Any questions so far?
Yes. Depreciation. Why is it massive? It's like
Oh, yeah, that's
going
a,
away.
depreciation is an asset. You must have saw it, this one. Okay. Depreciation and accumulated depreciation are different. Depreciation expense is an expense, while accumulated depreciation is what we call contract asset. So the normal balance of a contract asset is credit. So if the normal balance of an asset is debit, the contract asset is credit. Okay? So this is presented as a negative figure in your balance sheet. So this is where it goes. Um, Say for example, you bought a building where actually these are very deep topics already. You want to discuss this one or you want to go over the overview first? If you purchase a building worth 300,000, normally you record it as an asset, right? But as time passes by, we have this so-called wear and tear issue. So this is what you call the depreciation. So maybe it's caused by one is the usual wear and tear. Other one is technical obsolescence of the equipment, like say for example a cell phone. And another one is um, I'm not sure. There are a lot of reasons why an asset is being deteriorated. So the most common example is the depreciation, and there are a lot of complications for depreciation. But the most basic or most common is a straight line depreciation. Straight line meaning you're going to depreciate your asset on the basis of its useful life. Say for example, if you have a building, you estimate your building to be good for 10 years only. So therefore, you will recognize a depreciation expense of 300,000 divided by 10. So that's your per annum depreciation. And then, if you remember that one, okay, let's use this one. This is a building, okay? Its useful life is 10 years. So its annual depreciation expense is 30,000. Okay. So you should record this as expense. So your entry would be depreciation expense 30,000 and then accumulated depreciation for 30,000. So notice you want to increase your expense. The normal balance of an expense is debit. So you debited it. And then you also want to increase the accumulated depreciation, wherein its normal balance is also debit. So I will credit it. This is right. Now, in the balance sheet, your assets will not be diminished. Permanent assets, these are called the permanent assets, the equipment, building, this will not decrease in value in your balance sheet. So in your balance sheet, your asset will continue to be shown as 300,000. But it has an accumulated depreciation below shown like 30,000, and then it will have a value of 270,000. Now this is what we call the net book value. Okay, so this is your book value of your asset less your accumulated depreciation, then you will have your net book value. And this will continually decrease over the years until the estimated useful life of your building is consumed. So, any question? Did I answer your question? What's your question again? So that we can answer it directly. So why is it in the asset? Yeah, so that's what your question. So this accumulated depreciation is not an expense. It's a contra asset account. So that's why it's in the asset portion of the balance sheet. Yeah, it's a contra asset. Another example of contra asset is um, doubtful accounts. Doubtful accounts. So say for example, you have a receivable from your friends. Normally, doubtful accounts is from friends. So you will record a accounts receivable. It's an asset of 500,000. Now, you think that your friend will not pay you or anymore because you're close or something. So you want to exercise what you call this conservatism. You want to be conservative, and so you want to reflect the portion of your accounts receivable that won't be that we can't collect anymore. So therefore, you will record in an expense account of bad debts expense, where say for example 30, and then allowance for doubtful accounts costing 30. So in your balance sheet, it will show that your accounts receivable 500 less the allowance for doubtful accounts of 30 is only 470. So actually, you already recognize an expense for those receivables that you think you cannot collect. There's also a computation there, which will be further discussed in the LOB proper term 1. So for LOB proper term 1, you will break down each account or in the balance sheet and income statement. So for cash, you will build down the specifics of cash, accounts receivable, or inventories, things like that. Any questions on it so far? Here, this is an example of our tutorials before. So we normally conduct tutorials for our classmates, especially if we have an exam the next day or the next day. We prepare a lot of tutorials for them, courtesy of our class president. So according to the GSB, I don't know if it's true or they're just posting. We were the first batch to have no failing grades on the term 1. So we all passed all subjects. Yeah, this is a drill down of each account in your term 1 for the LOB, language of business. This is an example of the recording of balance. So if you can see this, so you can already relate what is the use for this and why is it placed as that way. So now you can tell your accountant friends debit credit. Anyways, any questions so far? Still have time, but I guess all the lessons that is due for the day is that. Then we can continue some for tomorrow. Or you want me to continue for the day? Okay, let's take a 5 to 10 minute break. Then let's decide later what to do.
If you have any questions, I don't anything other than accounting or anything. Kaya nag-take lang ng 5 to 10 minutes. Okay. Ay, pa sa discussion, nagawa nila or study lang. That's actually true. Pero in this case, nakapag and then for the management position, that's I think is the final. That's very good. Iba yung gadget, yung lab kasi yung parang so sa term 3, you will have the freedom to select which subject you want to enroll. So that's the time where you want to focus on certain electives. Like for me, I focus 10 minutes on finance. You're allowed to take it. I allocated it to one of the lima, naka department. Accounting, economics department. Pero meron sa email wala, kasi wala silang bago anak sa India, may Korean. May pa, yun. Pag-ibig na yung email ng tao, yun ang oo, meron sila. Ano yung mga klase ko?
Did everybody bring your thoughts? Because I'm planning to let's do an activity now for you. So for those who haven't bring their laptops, you can share them with your team. And that way, dalawa kayo mag-work. So just disconnect this and look for it. Right? Okay. So I think the first exercise we're going to do is good for 5 minutes. I'm going to give you chart of accounts, account items, and then you're gonna classify it whether it's an asset. You just write A, E, equity, revenues are, expense E, and then liabilities N. Right? I'll send it na lang to Miss Cora. Is it okay to start with this and then
Just taking one. Eh, dapat mo detrimental. Pag-isa. So, ang
Okay, since you are competitive, let's make it a little more difficult. So after you have determined the nature of the account, whether it's an asset, the element, what kind of element it is, then you need to construct a basic financial statement. So, uh, here. So you need just use your notes, construct the balance sheet and then the income statement. So this is a two-period balance sheet or two-period income statement. So what you're gonna do is you just some of a balance sheet, right? Just put the 2 years beside each other. So if this is a balance sheet, you just put the year 1 year and the other year. Then just supply them the accounts. Okay. Did you all receive the exercise? And okay. So let's make it good for 10 minutes. Yeah, open notes. You can open the glossary of accounts. And let's see if your balance, if you have a balance. So remember, your asset should equal to your liability asset. Only one balance sheet, but just place the numbers side by side. Like say for example, March 31 and December. Okay, timer starts now. And for audio, I have a for studying, I have a deep focus. Okay, tinalo ko lang sa spot. Yan. We're using the news Korea sa send a copy. So they can also do that. Yeah. With the leading white, you can join your seatmate. Kasi like, parang na-late ka yata. So parang mas kaya. And then in that way, you can make friends. A fun fact, on our batch, there were 6 couples who were, met their loved ones later. 6 couples na mamamilot and counting. Still counting. So guys, for the singles out there, previous batch. Oh, 14 couples previous batch. Still going stronger after MBA. Stronger. three minutes. Do you want to extend another 5 minutes?
So far,
Let's extend for another 5 minutes. Just make sure that your assets equals your liabilities plus. Okay, finish or not finish, let's all together answer the exercise. For okay, for additional paid in capital, what's what's the answer? Do you think is the answer? Is it an asset, equity, liability, expense, income? Equity. So this is an equity. So it can be found in the balance sheet later on. For accounts payable, as I said, all account titles which has an payable word is a liability. Accounts receivable is an asset. You correct your own work, ah. Accrued interest receivable is a receivable, and therefore it's an asset. Yes. Okay, sorry. Alright, what's your question again? Yeah, we can use okay. We can use Q for or C for capital. Let's use for C for capital. Bonds payable is liability. Capital stock is equity. Cash and cash equivalents is an asset. Cost of goods sold is an expense account. Dividends income, yes. Sorry, yeah. Thank you for reminding me. Capital account. Cost of goods sold is an expense account. Dividends income is a revenue account. Gain on sale of plant assets is a revenue. Income tax expense is an expense. Income tax payable is a liability. Yes. Where? Yes. Actually, for the purpose of exercise, since we're just classifying it according to what element, then gain on sale of plant asset is under the revenue portion or the income sales. It's in that category. But that's also a valid question. For interest expense, it's an expense. Okay, interest income is a revenue. Interest payable is a liability. Inventory is an asset. Loss on sale of marketable securities is an expense. Marketable securities is an asset. Yes. A loss on sale of marketable securities is when you sold a marketable security which its value is way lower than your previous acquisition cost. So say for example, you acquire stocks in the market, then you purchased it for 100. Then stocks fluctuates its value every hour, every day, right? And therefore, when if its value becomes 70 and you think it will go down lower, to cut your losses, you will sold it at 70. And then you will realize the 30 loss. So that could be classified as loss on sale of marketable securities. Net sales is revenue. Notes payable and short-term and long-term are both liabilities. Notes receivable is an asset. Operating expense is an expense. Accrued expenses is an expense. No, sorry. Accrued expenses is a liability. Plant and equipment is an asset. Prepaid expenses is an asset. And retained earnings is a capital account. So the trick here is, I think, just the prepaid expense, because most will classify it as an expense because of the word expense, and the accrued expense. So this is a liability and an asset. So for the balance sheet, your balance sheet should look like this. I would consider any balance sheet that has no current asset or non-current asset, as long as it's listed in the asset portion. So for December 31, 2016, total assets should be 770,000. And for March 31, 2017, total assets should be 989,000. There. So this is how you prepare. And then you eyeball. So how to interpret or just a basic interpretation of your financial statements is you eyeball. So say for example, in this asset accounts, look for the top three amounts or top three figures, the highest one. So that is where you currently invested your money in your business. So I need a volunteer. Just raise your hand. Any volunteer? I need you to identify the top three accounts in the March 31, 2017. Okay, yes, sir.
Accounts receivable, inventory,
Accounts receivable, inventory, and then,
current and non-current,
yeah, both.
planning.
Planning. Okay. So from there, you will know where your cash is tied up to. And then you can create management decisions. So plant and equipment is too large. So you don't know the company, but you can assume it's a manufacturing plant or it's a manufacturing business. It's a very heavy on equipment. High on inventory means it's a merchandising company and it uses inventory to generate cash. While high on accounts receivable, it confirms also that it's a retail business. So basically, from just this, it's the snapshot, right, of the company. You can see how the company is doing, or how the company looks, or what is the nature of the company. It's not an absolute suggestion, but it's a deduction. You can deduce from it. So you can see how the balance sheet items increased or decreased from December 31, 2016 to March 31, 2017. So accounts receivable increased, meaning you incur additional sales. Inventory increased, so you purchased or manufactured additional inventories, etc. Now, liabilities also should, total liabilities, okay, let's go back to the correction of items. Liabilities should equal to 450,000 for December 31, 2016, and 594,000 for the 2017, March 31, 2017. Okay, if you check who got the correct answer for the assets first? Okay. How about others? Where did you get them? Okay. For the shareholders' equity, it's 320 and 395,000 respectively for the two periods. And then it should tally to your total assets, 770,000 and 989,000. So for the liabilities and equity part, here's how you interpret it. This is where did your money come from? This answers the question, where did your money come from? Or who financed your business? So here you can see that your business is being financed 395%. Sorry, let's convert this to percent. It's 40% financed by the shareholders, and then it's 60% financed by its creditors. So looking at the financial statements, you can already conclude that, okay, who financed this business? Is it the creditors or is it the shareholders or the owners? So if you go back to your previous companies and you see a financial statements, you can check what does this liability mean, what does equity mean. So basically, this answers the question, where did the money came from? In the asset portion, it answers the question, where did the money go? Or where did you invest the money? So for current assets, This answers the working capital. This is your capital, and then this is your investment. Investment. So for income statement, oh, the reference. Okay, for the income statement, your total revenue should be 940,000, and your total expenses should be 875,000. Then you have a net profit or loss of 65,000. Did you got the correct answer? Did you got 65,000 in net profit or loss? Where did you, what item here did you got it wrong? Where did you got it wrong? You didn't subtract today. Ah, okay. But if you try to subtract, is it 65,000? So this is the profit graph. So the operations, your income statement answers the question, how well did you perform in the last period or in the period ending March 31? How well did you if you did well or not? So total revenues is 940, expenses is just 875, then you have a profit of 65. So you did well. And then you can apply all your lessons in strategy and etc. How do you grow your revenue? How do you minimize your costs? And so you can have higher profits for yourself. So basically that's it for the accounting. So we started from how to journalize an entry all the way up to how can we generate the financial statement. So this is the end product of the financial accounting process. Any questions? If none, then we can call it a day. Next. Yes. Okay. So normally we use YouTube for for the lessons. It is called Khan Academy. Yeah, Khan Academy. We use Khan Academy for our managerial analytics lessons and for the accounting lessons. So that's one. And then for exercises, maybe if you want, I can send you exercises to Miss Call. And then for tomorrow, I don't know how to do it for what you want for tomorrow because there might be new people for that will be joining tomorrow. So we might not be able to continue preparing all the transactions from the journalization of entries to the financial statements. So we need to accommodate that. So maybe we can refresh a little bit and then do an exercise that you will really do from the creation of journal entries and you prepare the financial statements. And then we can just maybe partner you with some guys there or you'll be able to assist them. Would that be fine? Any questions so far? Yes. E7. E7. This one. Ah, okay. I used the VLOOKUP. I VLOOKUP it. That's why I used the referencing different. Yeah. Did you learn the VLOOKUP yesterday? Yeah. Spreadsheet modeling. It's very useful in finance because you need to create a lot of forecasts and budgeting. Excel is very good. Excel is the needed skill. Yeah, we also use pivot table, but more on the data analytics, the managerial analytics. You conduct e-test, hypothesis testing. You learn use pivot table to sort the data. Yes, yes, sir. Correct. That's a valid argument. Dividend income comes when you as a company invested in shares of other companies and the other company declared dividends. So in your perspective, that's an income. But that's correct. If you're the one who's giving the dividends, then that should be a liability or a dividend payable or a cash outlay. But in this case, you invested in other shares, another company.
So technically, dividends are not.
Dividends are not expense. It's a reduction of your retained earnings or your cumulative profit or losses. So this is why you invest in stocks. So first is for capital appreciation. You hope that the stock will increase its value, and the other one is dividend incomes. You know that the company will pay dividends. Just like I am. Well, any questions so far? Even not in accounting related. So from the start of our discussion or anything that is about MBA or life activity. Okay, so things to look for, I guess, is our Cubs night. Are you familiar with Cubs night? So it's like a you know what is a fraternity or sorority, like it's a welcoming for the so the new incoming guys here we call them Cubs, and then the older guys we call them Tigers. And then there's this activity where Tigers' goal is to make the Cubs really drunk that we want to send them in a wheelchair. So last year, I think there were three classmates of us that went to the wheelchair, and hopefully we can send more in advance. I think that's the number one thing to look for in that is my say. Anyways, if you have no other questions, if you have questions, you can ask them. If not, thank you so much for your time, and I hope you learned from this.
Ayun na. Sobrang bilis na ng ako.
Just before the ano accounting messenger with that for your time. That is where we definitely information.
Kasi ang dami nila. Ay, sinabi ko. Guys, yung kanina number. Hanapin na lang natin. Nagamit mo, messenger ba?
Grabe. Actually, when nandito na kayo, mga lalagpak ng white book skills ng mga LD, basta madami tapos yung mga classes, yung mga close groups kayo dyan na kayo lang. Lagpas 20 yan.
Pwede sobrang tinipan na tanong.
Tapos ginagamit namin Viber, Slack, WhatsApp, Messenger, yeah,
Lahat.
depende.
Sa lahat ng iba tayo group. Ito, ang tawag tayo kasi ng Viber, baka yung mobile na. Slack yung part ng lahat. Slack file.
File sharing, and stuff.
Sila you can categorize.
Channel, different region.
Ano.
Ang ginagamit lang, Slack.
Yan, pwede. Sabi ko. Telegram. Telegram. Okay sa akin, Telegram. Pero number yung may number din. Number lang. Telegram. Nakalimutan ko. Hindi mo lang Slack. Pwede na lang.
Lahat na kayo mag-door. actually, yung mga hindi pa-accumulate na doon, maggusto nila sa hotel kayo.
Ay talaga, hindi ko rin na makikita pa lang.
Sa hotel ng ACCM. Pero yung ayaw na gusto mag-move pa kasi pag nag-break ka dito kasi alis na kami mag-move na. Then, yung complain naman sa ACCM, hindi pa yung career na for yun lang. Kasi sa doon, nakita niya ba yun doon? Next study career na yun. Tapos meron yung
Paano yung survey mo?
dalawang yung po, parang lang mauna.
Gusto mo doon ako sa mga bansa.
Kasi ano nila yung German yeah. Kasi pag hindi kayo nag-join, talaga ko nag-join, pero sabi naman, yung wala 30%. Pero yun nga, kung may mga activities kasi, umaabot ng 1 a.m., 2 a.m., let's go, so, ano pa, bigyan ka pa, so, balik ko rin ng morning. It's a good kaso, kasi, pag ang class nyo yun naman for, normally, pag the night before, you have 4 days to get it. Kasi 1 day per normally, hindi dapat. Pero, first, I-register sa amin. Wala ulit. Kasi ang what is sa meron mga dalawang
Ayaw nila magpa...
nag-aaway sila. Nagsisigawan talaga sa meeting. And lahat ng LTI, yung gagaan kayo dun sa
Is it okay to end the
sorry, wait.
Narinig pa daw tayo.
Okay.